morning. Welcome to IG's early morning call. It's Friday, the 15th of December, as we enter this last trading day of the last full week of 2023. Markets looking particularly healthy. In fact, the European markets looking as though we could well end up seeing little or no move on from yesterday's close. Let's take a look at the headlines as we focus on this equity market rally. S&P 500, NASDAQ on track to post a seventh consecutive week of gains. We've got record highs on the Dow Jones Industrial Average. We've seen recent highs taking us up to records on the Dow, records on the CAC 40, records on the Spanish IBEX. Got the London markets enjoying a little bit of a lift as well on the back of recent activity, which has led many back into risk markets. Meanwhile, outside of this, on the foreign exchange markets, looking at what's happening at dollar-yen. And I'll be looking ahead to the clues for the Bank of Japan interest rate meeting and a trade around this, so that we can harness what could well be an event which might see some volatility next week. We've got the Japanese yen, dollar-yen trade hitting a 4.5-month low as of yesterday's low point. And the retail sector. Costco late last night coming through. We saw a 2% rise in shares there in extended trade on the back of earnings. And then this morning, we've got H&M, but sales are flat in the fourth quarter. Take a look at what's happening with volatility as we continue to see this market bump along the bottom again, a new bottom, I should say, a new 5.5-year bottom. There is a green candle for a second in a row, but the body of the candles are so slim is that really it's just a question of waiting for the next move, which is either up or down. You can see here at the moment, we are looking for gains in the London markets now, 76.60, just a few points up on the cash close yesterday. But in fact, in yesterday's session, we have been far higher. All the way up at the high point yesterday at 77.25, where the intraday highs have not seen since the middle of September. But the money is going back into the London markets, and we're seeing some of those gains coming through in the minerals sector, with the likes of BHP, Rio Tinto on the back of better than expected lift-off in some of those base metal prices. We've got precious metals on the way up, and we've got oil as well up for a third day now off those 6-month lows. So many of the component parts, the FTSE 100, enjoying a lift, giving a lift to the main benchmark. German DAX, as of yesterday's intraday, we went all the way up to 17,000 and change, up at 17,003.9 for the intraday record high on the German DAX. And then came what was a negative trading day overall. In fact, the red candle here is the biggest individual day's decline we've seen in the 24-hour market since the middle of October. We've got money going back into the markets today. Again, like the London markets, we are looking for a small gain on the back of what was overall a negative trading day yesterday on the cash market. Same sort of thing in France. We've got, in the last couple of days, we've seen new record highs on the CAC 40, currently trading at 75.92. Again, looking potentially there for a rise at the start of today's session in half an hour's time. Let's take a look at what's been happening overnight in the Asia-Pacific markets, where we got the close of today's session with the Nikkei up almost 0.9%, a relatively strong day, in excess of 2% up for the Hang Seng. And you can see as well, I think it's the fifth day in a row now, we've got S&P ASX 200 up almost 0.9% in the session in today's trade. Certainly a positive trading week across the Asia-Pacific markets. Nifty 50 in India, another one where we're seeing a lot of buying interest as well, up at record highs, that benchmark index, as we see India collects a lot of weight in terms of its overall global GDP and gross national product as well, and it's now beginning to snap at the heels of China in terms of the size of the economies around the world. Let's take a look at what's been happening on Wall Street. As I said, we got another record high yesterday on the Dow Industrials, S&P 500, NASDAQ just bumping below the record highs that we've seen the last couple of years or so, but the Dow really flying on the markets, and indeed up again in yesterday's session. I'm going to show you the chart here, and indeed in the 24-hour markets, we've got another new all-time record high in the Dow, 37,338.4. So money continues to go into these old economy stocks at the expense of some of the money that has otherwise have gone into some of the tech stocks. That being said, despite the fact we saw a red candle on the 24-hour markets on the S&P 500 yesterday, we are now up again at 47.31 on the S&P 500. This red dotted line at 48.18 is the record high that we had there intraday on the S&P 500 back on the 4th of January 2022. So very close to 24-month highs for the S&P 500. Same sort of numbers out for the NASDAQ. The NASDAQ, the high that we saw this week was at 16,667, which was on Wednesday. Since then, we've seen a little bit of a pullback after that Fed interest rate decision. It's clear that the Fed is now adopting a more dovish attitude to what's happening in its environment. And expectations are we could well see the next move on the way down sometime next year. It's just a question of when. Now that news is out of the windscreen, if you like, and it's now in the rearview mirror. People are now just beginning to bank some profits that they've seen as they go into the back end of the year. At the moment, we do have a little bit of money going into the 24-hour markets on the S&P, on the Nasdaq. You can see the red candle yesterday, despite the fact we saw a gain on the cash session. The 24-hour markets yesterday did see a little bit of a pullback around about where we are at the moment, 16,580. Let's take a look at what's been happening out overnight. The midnight release of the GfK Consumer Confidence number here in the UK has come with a little bit of a positive surprise. Households were less pessimistic about their future financial situation last month. The GfK Consumer Confidence Index rising to -22 from -24 in November. This was pretty much in line with the consensus forecast, with all 5 of the survey's components inching higher. I think it's worth looking at what's happening with sterling. Now, yesterday, I think, if anything, of all the major central banks we've seen recently, the Fed, the ECB, the Bank of England was the most hawkish or the least dovish, if you like, if that's the right way of putting it. And as a result of that, money going back into sterling in a relatively strong way on from the Fed decision the previous night, where we've seen money coming out of the dollar. So money coming out of the dollar and going into sterling has given this little bit of a rocket boost for the pound. And indeed, in yesterday's session at the high point, we saw a trade that we've not seen in this market since the 22nd of August. So money going back into sterling. Is there a pattern developing here? I can't see anything other than the fact that we got these new higher highs, which to me gives me an interesting opportunity here to continue buying this market. And if you are to buy, you want to put your stop underneath some of the recent price action here. It's rising line of support. So if you are long on this at 127.65, stop goes down here right about just below the 126 level. And the next point to watch out for is the 128, which was the highs that we saw there back on the market on the 22nd of August. So not too far away from that in terms of the chart. Then the next big number, the 130, the highs we had back on the 27th of July this year. So that's the next big high thing. And that's something for 2024, I suspect, we could well end up seeing money going back into sterling in a rather larger way. Meanwhile, in China, we've seen some data out overnight, industrial production rising by the widest margin since September 2022. Industrial output in the world's second largest economy, growing 6.6% in November, year on year, beating expectations for a 5.6% increase. Retail sales up 10.1% in November, accelerating from that 7.6% increase we saw in October. But now this number at 10.1 missed analysts' expectations of a 12.5% increase. So it's looking for something even more bullish from where we are. USD CNH is the area of the market that's worth looking at. Fixed asset investments expanded 2.9% in the first 11 months of 2023, missing expectations for a 3% rise. Now, this set of indicators follows other November numbers that depict an economy that's struggling for momentum. But nonetheless, we've seen the stronger CNH here, and this is the dollar trading down against the Chinese currency. But bearing in mind, we've got money coming out of the dollar across the board. It's very difficult to gauge exactly what the effect of all this data is on the foreign exchange markets. Exports rising for the first time in 6 months in China, but only because manufacturers offer discounts that won't be sustainable. Consumer prices falling at the fastest rate in 3 years, and factory deflation is beginning to deepen. And this is the real worry, I think, for the Chinese economy. But despite that, as I said, money is moving away from the dollar into the Chinese yuan. You might remember back on Tuesday, top leaders in China said they would step up policy adjustments to support the economic recovery in 2024 with a focus on boosting domestic demand. Remember this time last year, when we were looking at going into the back end of the year, hopes were that they would lift all COVID restrictions and now it would be liftoff for the Chinese economy, but nothing like that. But nonetheless, let me just quickly show you what's been happening since that change in the year between 2022 and 2023. That's where we were as at the close of last year. So not too far away, actually. It has been a bit of a roller coaster ride, taking us up not too far away from the highs that we saw back on 25th of October 2022 for the dollar against that weaker Chinese yuan. But since then, money's going back into the Chinese currency. Now, outside of all this, it's PMI day today for manufacturing services PMI data in many economies around the globe. Japan data was published overnight. Factory activity there contracted for a seventh consecutive month, while the services sector showing a modest increase in activity. In Europe, we're looking for the data out a little bit later on. It's drip fed throughout all the major economies. We've got the UK, we've got Germany, France, Italy, Spain, and the Eurozone numbers as well. All indicators for France, Germany, and the Eurozone forecasts remain in contraction. That is everything below 50. In the UK, manufacturing activity has seen contracting for a 17th straight month, but the services part of the economy here in the UK expected to remain above 50. Now, you remember this time last month, that services sector in the UK was the only area where we saw an expansion. That was at 51, keeping the composite indicator in expansion as well here in the UK. So, if anything, that's where the only sort of bright picture is across Europe. And a similar set of activity is expected in the States a little bit later on, with manufacturing contracting and services modestly expanding. So I think whichever way you look at it, it could well be an interesting run of data out that we've got in today's session for PMI around the world. Now, this may provide us with some trading volatility next week. The Bank of Japan interest rate decision on Tuesday, the 19th of December. As we speak, the main US dollar Japanese yen is poised for a record fifth week of losses in a row. The pair touching a 4.5-month low, as Jerome Powell said the US Federal Reserve could start cutting interest rates next year if inflation continues to fall. And this has stirred this negative activity here on this chart here, which essentially means that money is going into the Japanese yen at the expense of the US dollar. Now, on Tuesday next week, the Bank of Japan will decide on its interest rate picture. No changes expected. But a Reuters poll shows that 20% of economists believe the Bank of Japan will start dismantling the current monetary conditions in January. Over 80% of economists expect the Japanese central bank to ditch negative interest rates by the end of next year. Now, I'm looking at this area here where I've got these two arrows as the point of the watershed, if you like, as to whether we see further declines in the dollar against the Japanese yen, or we see this area of 140.57 being supported. Expectations are growing. The Bank of Japan will soon signal a winding down of its ultra-low rates policy, and the December 18th, 19th meeting could provide an opportunity on that. So how do we trade that? Well, I think the thing to watch out for here is this area of 76.4% fib retracement support from the lows that we had there back on the 14th of July to the swing high at 152 when the dollar rose all the way up, sending the Japanese yen into a tailspin. There was no formal intervention by the Japanese authorities at that point, but when it hit that up back in the 13th of November, all of a sudden there was an opportunity here to sell the dollar on somewhat better data here on this side of the economy, around the US economy particularly, and money coming out of the dollar as a result and going back into the Japanese yen. Now, we disappeared below the 200-day moving average in the last couple of few days or so, as of the time of recording at the back end of this current week, ahead of the Bank of Japan interest rate policy. And that's the point we've not seen below the 200-day moving average, not seen since the 17th of May. But I think this line here at 140.57 is going to be key. If you get a candle close below there, I'd be then short all the way down to 137.05, which is a swing low on this fib here down there. If you see this area of support being an area of support which is holding, I'd be then more keen to go long on this trade out of this. So that's a technical trade out of what is essentially a very fundamental piece of news next Tuesday. But certainly the Tuesday release from the Bank of Japan could well give us some trading volatility. Now, let's take a look at what's happening in other areas of the market, because we've seen some data coming through from Hennes Mauritz. Now, Hennes Mauritz is one of these stocks that doesn't trade spread bets, but it does trade CFD. So if you want to bite on Hennes Mauritz trade, you've got to go onto the CFD platform. It's reported fourth quarter sales this morning, and fourth quarter net sales are flat compared to the same quarter last year and amounted to 62.6 billion Swedish krona. Now, the median analyst estimate stood at 63.1, so that's somewhat weaker than we had been expecting. Year to date, Hennes Mauritz shares are up 55.6%. So is this an opportunity to sell? Well, you'll see here this little 15, which gives you 15 minutes of delayed trade on this. But nonetheless, if you wanted to trade this short at 176.400, your stop goes above here, above the 180 level, with a view to taking it down at some point this morning, if you do agree with certainly Bloomberg and analyst estimates, that this number here is a little bit of a disappointment in terms of net sales. Net sales are flat, but they come in short of expectations. So Hennes Mauritz, a stock to watch on the markets. Let's take a look at what happened late last night on the US markets, because a stock which doesn't trade all sessions on the IG platform was certainly of interest. Costco rising 2% on extended trade. Its sales and profit forecasts that did some impressive upside. The group increased its market share as consumers kept looking for cheaper groceries and essentials. And the company reporting per share profit of $3.58, above expectations of $3.40. Costco reporting the revenues rising 6.1% to $57.8 billion in the first quarter. Estimates have been just shy of that. Costco saw total paid household members rising by 7.6% in the quarter, while its membership fee revenue jumped 8.2% to just over $1 billion. So the thing about Costco, they can continue to offer these low prices, and people want to continue their membership. So it's a really good income stream for Costco. I want to show you the share price chart on spread bets. Yesterday, this doesn't include what we saw late in the session yesterday. Yesterday, we were down 1.66% in what was a bullish engulfing candle. But if we do get a rise today, which certainly looks like it's going to be the case, that offsets that, bearish engulfing candle. Did I say bullish? Bearish engulfing candle. Then that will all be offset with another rise. Now, this is a record high for Costco that we've seen the last couple of days. So we're adding to last night's close at 631.10 by a margin of 2% at the start of today's trade as a result of the news out late last night. Let's just take a look at a couple of other areas of the market. I want to take a look at what's been going on with the price of crude. Brent and WTI on course for modest weekly gains. The first in 2 months. Again, this follows a Fed announcement of a likely cut in borrowing costs next year. Hopes are that it might stir a little bit of interest and a little bit of growth around the world. Last Friday, Baker Hughes' total rig count rose by 1 to 626. The number of oil rigs in operation fell to 503 from 505. Does that make a difference? Not really at the margins, but nonetheless, it is interesting, I think, to look at what's going on in the oil markets around that Baker Hughes release at 6 o'clock this evening. Just want to dial in what's going on with the price of gold. At the moment, with the top of the candle at 20.38, gold holding on to what's overall been a net profit on the week as we see this market continue to rise, being supported down here at the 1976 fib retracement level that we've been talking about. It looks like the long trade is back on. If you're long on this, entering a new trade, your stop goes below the 2000 level. And price is very much this record high again that we saw established on this peak we saw back on Monday. A couple of weeks ago on the 4th of December at 21.21. That's the price target if you're long the price of gold. That's it. Back at 10:30 we're charting the markets. Just under 15 minutes to go to the start of today's European session. Now looking for gains across the board once again as we go into this last full trading day of the week.